Hey, what's up, my friend? So in today's video, I want to share with you, right, to whether the stock market, is it too high to buy right now? Because a common questions that I've been getting recently is that, hey, Rayner, the stock market looks really expensive right now. Should I buy? Should I enter a trade? But what if I buy and then a correction comes, I get stopped out and stuff like that. So let's, analyze this step by step and talk about this topic today. So if you look at this chart, this is the chart of the S&P 500. Right now we are trading almost the highs of $4,000, which is here. We are almost at 39.50 around here as of right now. So you can see that this market is still very much in a long-term uptrend. Okay, does it look high? Yes, it looks high. It looks high. Is it expensive? Yes, it looks expensive. But here's the thing, right? I want you to go back in time, follow me, and if you look at this, right, you can go through the charts and you'll see what I mean. At this point, right, at 3,300 back in August, you can see back in August, the price is trading near 3,300. And it's near the all-time highs over here, just shy of the $3,400 price point on the S&P 500. So at this point, you can see that on this date, the market looks really high, it looks really expensive. And then what happens? Well, the market continue to head higher with corrections along the way, but eventually still continuing its grind higher to where we are right now. So the first lesson that I want to bring out to you is that in the markets, right, what's high can become higher. Our job is not to buy at the absolute lows at the bottom of the market. We leave that to the value investors. We are traders. We want to just stay on the right side of the market and to trade along the path of least resistance. And if you look at this chart right now, I'm sure you can agree with me that the long-term trend of the S&P 500 is still towards the upside. It's still in a long-term uptrend. So as a trader, our job is to trade in the direction of the trend. Now, I agree that at this point, market looks really high. It looks expensive. It looks like there could be a correction, a pullback coming along the way. That's possible, but we have no idea when the correction or pullback will come. So you might be thinking, but Rayner, what if I buy the stock and the pullback, the correction comes and I get stopped out? That's possible, right? But what is more important is that you want to set your stop loss, right, at least at a level where it prevents you from getting stopped out on a short-term pullback. So for now, the first thing that I want you to agree with is that the overall stock market is in a long-term uptrend. We should be looking for buying opportunities, right, in this long-term uptrend. Next question is this. What if a pullback, what if a correction comes and you get stopped out? Well, this is where you want to set a proper stop loss, and I'm going to share with you how to do it right now. If you look at this stock, right, this is a stock, Upwork is basically a company that helps, connect freelancers with employers. It's doing well since, the COVID crisis and, because most people are working from home. So this is a stock of Upwork trending up higher over time. You can see that it is in an uptrend, but I can assure you that just because a stock is in an uptrend doesn't mean that traders are able to capitalize on this, uptrending market. Why? Because they could be setting a very poor stop loss on this trade. So let me give you an example. Let's say this stock breaks out at $38. Some traders could buy. I would say that's a decent trade. And where would they set their stop loss? Maybe below the low of this candle or somewhere here. And if you set your stop loss, right, too close to the market, too close to the noise and the randomness of the market, you might get stopped out on a pullback and correction. And this is actually what happened. Market did break out. Then there's a correction before it breaks out higher. So often traders, they get the direction right, but they have the wrong stop loss, a poor stop loss level that gets them out of the trade right before they can even, take advantage of the trend. So now the question is, how do you set a proper stop loss? So there are a number of ways you can do this. You can, use a percentage trailing stop loss, but for this video, I will share with you what I call the setting a stop loss based on the volatility of the market. So what you want to do is to identify what is the current volatility of the market, and you can do this using the ATR indicator. Okay, you just can go to TradingView, you go indicator, you search ATR, pull this one out. The settings I use is 20 period because there's 20 trading days in a month, and I go with SMA. Simple stuff. So you can see that right now, the indicator tells you that this stock, the ATR value is about $3.18. How do I know that? Because it's actually shown over here. This number would, okay, let me just point out to you over here. Okay, so this number will fluctuate on a day-to-day basis. Right, it measures the historical volatility of this market over the last 20 days. And on average, these stocks move about $3.18 a day. So what this means is that if you buy this stock and you set a $1 stop loss, a $2 stop loss, a $3 stop loss, doesn't make sense because you know that this stock on average moves $3.18 a day. Your stop loss needs to be wider than this to accommodate, right, the random swings in the market. So for me, what I suggest is that, go with a longer term trailing stop loss, right? Don't just go with one ATR. Minimum 5 or 6 ATR right? So you can actually, capitalize on this long-term uptrend. So in this case, let's say we go with a 6 ATR trailing stop loss. And the way we do it is that you just take $3.18, you multiply it by 6, and it should give you, okay, I'm going to do this based on my own math. I forget it. Let me use the calculator since it's here. 318 times 6, that's about $19.08, okay? So what this will do, what this means, right, is that from this highs, okay, let's say it's X, you minus $19.08, let's say it's equals to Y. That is your trailing stop loss. So let me just walk you through this example. So let's say right now it's about, let's make things simple, it's at $60.50. You take $60.50, you minus $19.08. Okay. So that should give you a stop loss of about $41.42, which is somewhere about here. That is your trailing stop loss. And again, I don't expect you to do this manually, so there's actually a very useful indicator for this. It's called the chandelier crow stop. You can just go to settings, 20 period, look back, 20 period ATR, 6 ATR as the multiplier. Okay, so let me just get this out. Again, you can just go to indicators and search for this indicator name, and you should see this blue line over here. Okay, so this one, there's some slight discrepancy between this blue line and doing the multiplication of the ATR indicator, but the discrepancy is very slight. It won't really kill you. So anyway, to make your life easier, you can use this tool if you don't want to manually calculate the 6 ATR trailing stop loss. And you can see for this stock, this upward, if you were to trail your stop loss using this blue line, which is in essence a 6 ATR from the highs, it would have kept you in this trend since May 2020. So that's how you go about, riding massive trend in the stock markets, identifying stocks in an uptrend and then trailing your stop loss, right? Making sure that your stop loss is not too close, not too near where the market is trading. So this gives you a good chance, right, of riding trends in the stock market. And that's how you go about setting your stop loss. If you look at another example, right, SITM, Sydney Corporation, again, same thing. If I go with a 6 ATR trailing stop loss, there are times where I almost get stopped out over here in November 2020, but generally, you would still be in this trade, right, for the long run. So yes, stock market may be high, but we have learned that what's high can go higher. Next thing is, yes, correction and pullbacks, they are a natural phenomenon in the market. And that's why as a trader, you want to set a proper stop loss so you don't get stopped up prematurely. And one technique to use is the 6 ATR trailing stop loss that I've just shared with you. So before we end this video, let me just share with you a couple of trading opportunities I'm looking at right now and how you can look to trade it. So first one I want to share with you is this stock, right? SITM, Sydney Corporation. You can see this stock is in a nice bullish uptrend. So now, where can we look for potential buying opportunities? What I'm seeing over here is that this is an area of value where the swing high or resistance, which could become support, right? That's that one's over here. So you can look for a pullback into this area of value, this area of support. Look for a bullish price rejection, could be in the form of a hammer, a bullish engulfing pattern. This is a hammer, something like this. When this forms, right, this is a sign that, hey, there are buyers stepping in, helping to push the price higher. And what's more, you're trading in an uptrend, you're trading from an area of value. When this happens, you can look to buy on the next day open. So now, where do you set your stop loss? So remember the technique I shared with you, the chandelier crow stop, 6 ATR from the highs. Just use this indicator, which is this blue line over here, and your stop loss, you can set it just below this blue line. Okay, so this should give you, right, enough buffer that should the correction or the pullback come, there's a good chance you can withstand it. Of course, it's not guaranteed, no 100% guaranteed, because if the market goes in a full-blown correction, it drops 30 or 40%, there's a good chance this stock, right, will exit more than 6 ATR from the highs. But if it's just say a normal correction, a 10% correction pullback, right, you should be able to stay in this trade and to ride the trend higher. Okay, so this is one potential setup to look at, Sydney Corporation. Another one is Etsy. Okay, if you look at this stock again, nice, beautiful uptrend. So where can we look for buying opportunities? If you pull out this 50-day moving average, you'll notice that this stock tends to respect it, right? Tested once, twice, and possibly a third time over here. Okay, and what's more, this also has the confluence of the previous swing high, which could become support and possibly become support over here once again. So I'm looking for buying opportunities around the $190 price point. Again, you can look for a bullish price rejection. Price comes in, quickly get rejected and close back above support. Look to buy on the next candle open. Stop loss, again, you can use the chandelier crow stop. I pull it out somewhere about here. So make sure your stop loss, right, go below this blue line that you see over here, which is 6 ATR from the highs. And that should, give you a good chance, right, of riding this trend up higher. Now, if you want to learn more about stock trading strategies, techniques that work, then here's what I want you to do, right? Go down to my website, tradingwithrayner.com/webinar. I'll be hosting a free 2-day online event on the 27th and 28th of February. Okay, so in this 2-day, right, here's what you'll learn. Day 1, we'll talk about the trading habits, right, that keep most traders poor without them realizing it. Sniper trading entries that you can use, right, to better time the markets. Simple price action trading strategy to profit in bull and bear markets, and a ton of trading examples, chart examples like what you've just seen. Day 2, right, we'll focus, right, on stock markets, right, how to beat the stock markets consistently and profitably, even if you've tried everything else. Even if you have tried everything else and failed. How to still hedge fund winning trading strategies so you can shortcut your learning curve and become a profitable trader fast. My top 4 trading tools that will save you a ton of time and money, and a simple stock trend following system that works, and much more. So this event is completely free. You can just go down to this website, this page over here, tradingwithrayner.com/webinar, and you can sign up for it. And also, if you can't make it to this event, don't worry, I'll send you a copy of the recordings, but you must sign up for this event so I know where to send the recordings to. Okay, so just go down to this page. You'll see this green button. Just click on it. You will be brought to a Zoom registration page. This is the platform that will be used to host the event, the webinar. So just sign up your details, your first name, last name, email, and the details of the webinar, the link, how to join and stuff like that will be sent to your email. So with that said, right, I will see you at this live event, Profitable Trading Secrets, on the 27th and 28th of February. So go sign up for it. I'll put the link below, and I will talk to you soon.